Hi everyone, welcome to this discussion around COVID recovery. Thank you for joining. I'm delighted to be here and see a solid group of people joining us for this conversation. My name is Carolien Bruin. I work at the World Economic Forum running strategic initiatives for the Schwab Foundation. And most relevant for this conversation, I'm part of a team that launched the COVID Response Alliance for Social Entrepreneurship out of the World Economic Forum earlier this year. The alliance was launched in response to the COVID crisis on social entrepreneurs and in response to the impacts of the crisis on social entrepreneurs and the communities that they serve. I'm realizing that exactly on this minute right now, they're starting to do some drilling outside. So I'm hoping that the sound and noise is not too bad. Earlier this year, the COVID-19 crisis threw a curveball to all of us as the pandemic began to hit. Very soon, countries went into lockdown, businesses closed, jobs were lost, and healthcare systems everywhere came under extreme pressure. Across the world, those who were able to do so withdrew into the safety of their homes and communities. Yet now, 6 months later, the devastating effects of the pandemic have become abundantly clear, with vulnerable and marginalized communities, not surprisingly, being hit the hardest. The World Bank estimates that over 100 million people will be pushed into extreme poverty due to COVID-19, writing off all gains made to alleviate poverty since 2017. With tragic stories coming from across the world, some of them you will be hearing about from our speakers today. In this session, we will double down on social entrepreneurs and the role that they play as first responders to the crisis, as well as impact investors as a critical provider of financial and non-financial support to these entrepreneurs. For this conversation, we have with us a few amazing leaders in the field, some also members of the Alliance that I just mentioned, who have each responded to the crisis immediately when it hit. First joining us is Ashif Shaikh, founder of Jansa House, a 20-year-old community organization in India that has responded to the crisis by providing food to over 420,000 migrants and emergency transportation to over 17,000 migrants and their family. Cheryl Dorsey, founder of Echoing Green in the US, who with her organization has raised and dispersed $223,000 and counting in emergency grants that will be put towards social entrepreneurs with urgent cash flow needs due to the crisis. We have Sushma Kaushik, partner at Avishkar in India, who have provided relief grants, equity financing, and technical assistance together with a sister organization IntelliCap. And finally, Florence Kimata, a business reforms advisor at the Business Transformation Department within the Kenyan government and member of the GSG's Kenyan National Advisory Board. Florence has been working with the Kenyan government to ensure basic needs and services reach the most vulnerable during the crisis, but also related to our conversation today has been providing first loss capital where needed to investors and intermediaries to sustain some level of market liquidity at this time of need for capital also to continue in business for many of these entrepreneurs. Let me hand it over to our panel members for a few short opening remarks, and we will then open it up for questions and we'll end with some closing observations by our speakers. I was told that we will all be kicked out of virtual room on the dot, so I will try to be managing time well. Dear panel members, can I ask each of you in a few minutes to introduce your organization and perhaps most importantly, tell us about the most pressing COVID-related needs you have witnessed in your work when the pandemic hit and your response to the crisis. Ashif, could you maybe get us started?
Yeah, so thank you, Carolien, for this opportunity. Am I audible?
You are.
Oh, okay. So thanks for this opportunity. And basically, my organization is a 20-year-old organization. We are working in the North Indian states of India. And in last 20 years, basically, we try to reach out the most excluded and the vulnerable social groups, including manual scavengers, survivors of rape and sexual violence, survivors of trafficking or commercial sexual exploitation, bonded labor. As far as the COVID is concerned or the lockdown is concerned, so on 24th, like the March 2020, Government of India announced the lockdown in India. And basically, we are running a national helpline for the migrant worker. So within 2.5 hours, we received more than 700 calls from the migrant worker. And immediately we realized that during the lockdown period, migrant worker will face the tremendous level of problem and challenges in their life. And on the next day, basically, we started a rapid assessment. And through the telephonic interview with the migrant worker, we released the impact assessment report within a 1 week. And then we initiated a very large nationwide program for the migrant worker. As of now, we supported about 1.7 million migrant workers across 100 districts of India. And our support mostly related to the food, shelter, and the ration support. We also provided a support related to the mental health, transportation support, and basically we also very much focus on utilization of the government resources, particularly social security benefit for the migrant worker. We also document about 800 cases of deaths of the migrant worker across India, and basically these deaths are related to the during the travel, and about 20%, 28% death cases because of the suicide in the migrant community. So basically, now we decided to launch a nationwide collaborative with another 50 civil society organization, and the collaborative called Migrant Resilience Collaborative. Under this collaborative, we are trying to support about 10 million migrant worker. Migrant worker is not like the national problem or problem only in India. Is a global problem, but particularly in India, we have about 200 million migrant worker, internal migrant worker, and they are basically migrating from the rural area to the urban area for job and like the employment opportunity or livelihood. But in the COVID period and in the near future, they will face various kind of challenges. So basically, we try to overcome their challenges through the various kind of intervention. On 2nd October, we are planning to launch 50 district level migration resource center across like the 10 states of India. And we are also in process to initiate a national toll-free helpline for this community. So these are like largely our interventions for the migrant community. Last point I wanted to make here about the vulnerability level in the migrant community. So basically, most of the issues related to the trafficking, related to the bonded labor, forced labor, child labor, or sexual exploitation against women and girls, most of the survivor in these like the categories come from the migrant community. So the meaning is the vulnerability and the exclusion of the migrant community is very, very high. And particularly during the COVID period, they required a very specific kind of support, not only from the government, but also from the civil society, from the people's movement, from the philanthropy and the private sector. We also initiated a very large movement with the private sector. They can commit and take a pledge to support the migrant worker. As of now, 5 companies and the large, like Indian large 5 companies sign up this petition, and we try to scale this movement also. Now I can stop and I will take the questions. Thank you.
Thank you, Ashif. And it's a clear example of a social entrepreneur and enterprise really playing the role of first responder and frontline worker in addressing the crisis. With that, Cheryl, can I hand it over to you?
Sure, thank you. It's so good to be here with everyone. Ashif, thank you for all that you're doing. It's incredibly important and such a powerful example of why social entrepreneurs on the front lines are so critical. Carolien, you mentioned Echoing Green had provided some emergency grants to social entrepreneurs like Ashif who are doing critical work in the world. I think I'm going to spend my few minutes of introduction saying why Echoing Green and so many others are providing this response because we cannot forget what's happening in this moment. So again, for those of you who don't know, Echoing Green is an early stage funder of emerging social entrepreneurs, and we're one of the most recognized leaders in the field of social innovation. We now have a community comprised of about 900 or so social entrepreneurs working in about 90 countries around the world. We've been very intentional about trying to diversify the voices in the social innovation space. So when you look back over the past decade in particular, about 75% of our US fellows are leaders of color, about 50% are women, and globally about 75% of our fellows are proximate leaders of the communities that they serve. So they're seeing really what's happening in real time as a result of this global pandemic, as well as for those of us in the US, another pandemic, sort of the racial reckoning that we're going through at this moment. So I will say a couple of things. I think we all know that the severity and urgency of certain social and environmental needs are intensifying. The pandemic is obviously a global phenomena. The effects are far-reaching and they're fast-changing, but as Ashif alluded to, they're unevenly distributed across different socioeconomic classes. And the world's most vulnerable are bearing the brunt of the effects of these twin crises now, the global pandemic and economic crisis. Let me give you a few statistics. So I'm here in the United States. In New York City, one of the areas hit hardest by the pandemic, African Americans have died at twice the rate of their white counterparts. In Chicago, in the middle of our country, African Americans account for about half of the cases, but 70% of all deaths, and they comprise only about 30% of the city's population. When you look at how the social impact sector is being hit and how they are responding, let me just give you a few more statistics. I know that I'm sure Florence will go into this, but emerging markets are facing disproportionate capital shortages. We have some data out of GIN and others that we've seen a sharp reversal in investment in emerging markets, both impact and non-impact capital, with about 90 billion or so of foreign capital exiting emerging markets at the beginning of the year through late March. When you look at some recent work coming out by Andy and Jin and the R3 Coalition, it found that about 42% of small and growing businesses face imminent risk of failure as a result of constrained operations. Over a third have already reduced their staff sizes, more are going to do so. When you look at what's happening in the philanthropic sector, it's the same thing. There is a wonderful group, CAF America, that has been surveying social impact organizations, nonprofits, monthly or almost every other month for the last 6 or so months. They found that 1 in 3 organizations are going to be forced to close down within the next 12-month period if something doesn't change dramatically. About 16% haven't received any funding in the last month. And like for-profit businesses are struggling to manage their current operations. But for the nonprofits, in addition, they're also doing this while trying to deal with the increased need for their services, while seeing a significant pullback in the size of their grants. I just wanted to give you a lay of the land of how emergent and how dire it is for so many social entrepreneurs like Ashif and others who are doing this critical work. And the question really becomes, how do those of us who provide funding as direct funders or intermediaries stand alongside them to allow them to do the critical work that they're doing in this moment? So I can stop here. I can loop back to give you some more data on, again, how people of color, indigenous leaders are being disproportionately impacted as both vulnerable populations, but also as leaders of social enterprises. But I'll stop here for now.
Thank you, Cheryl, and also for all the great work that you're doing with Echoing Green, also on that second dimension, which clearly we had a few crises that have been hitting us kind of on top of one another. Sushma, can I hand it over to you?
Sure. Thanks, Carolien, and thank you for having me on this panel. There are some amazing practitioners here. And Avishkar is a mere catalyst in providing capital to the wonderful work that everyone does in social entrepreneurship. So a quick, background of who I am and what I do at Avishkar Capital. So Avishkar Capital is probably a pioneering impact investor from India. We started off in India, and now we have branched off to South Asia and Africa as well, because the problems in the South Bloc continue to be very similar. And we currently manage close to 400 million of assets under management just as Avishkar Capital. And under the group, we manage close to $1 billion of debt and equity assets. And everything is going to mobilize towards social entrepreneurships or social entrepreneurs solving for very large, complex social problems. Coming to the pandemic issue, and Cheryl threw some really alarming numbers there, and it's very similar to what we are seeing in India as well. So I think, 2 decades of fighting against poverty has pretty much been wiped out with this one pandemic, right? And about 193 countries had signed up for the SDGs back in 2017. And, things were moving slowly, but they were still moving forward. But this pandemic has really set us off by many, many years. Of course, starting with, healthcare workers and the problems they face. But I want to highlight the second order impact that a COVID has created, right? The kind of numbers that we are getting is close to 1.6 billion informal economy workers globally have lost livelihoods. That's like pushing multiple generations into poverty, right? The second order in terms of education, we all know that most kids are now being online educated. Very easy for people like us to say, because we have good infrastructure, we have mobile connectivity, internet connectivity, but close to 500 million children globally don't have the luxury of online education. And that's just going to bring them out of education and push them deeper into poverty. And any hopes they would have of getting out of there will all be squashed, right? The other thing for a country like ours, we were looking at a requirement of close to $350 billion to meet our SDG goals annually, right? And this was assuming that our country's economic rate would continue to grow, and that private enterprises would continue to grow and contribute to the GDP. All of that has evaporated, right? So the bigger question is, how do we fix this widening gap, right? And it's clearly not just government or government organizations who can contribute here. I think it's time now, and as we're hearing from Ashif as well, that everyone is coming and contributing in multiple ways, whether it's private sector, whether it's civil societies, NGOs, communities. All of them are coming together and mobilizing funds, resources, technical assistance, everything possible to make it a little easier for population at large. And similar at Avishkar Capital as well, we continue to support our social entrepreneurs, providing them with technical assistance. Many of our companies are far-reaching distribution businesses in the hinterlands, in rural areas. So we try to mobilize a lot of the PPE kits and the basic requirements of medication, food kits. Unfortunately, during the pandemic, there were severe floods in certain areas of India. It just exacerbated the problems for a lot of people. And so, all of this put together is only showing one way forward for private investors like us, that investors in the past only used to look at capitalism. There is a need for innovation there. It can't be only for-profit investments. It has to be for-profit with resilience and impact as an outcome for investors to put their money there. And that's where I will end it, that there is innovation required in that space.
Thank you so much, Sushma, and for bringing in the investor perspective, kind of from an emerging markets angle. With that, and also realizing that there's many different definitions out there around what is a social enterprise. Is it a small and growing business? Is it more than that? As people participating here want, we can, happy also to go into that a little further. Handing it over to Florence then to comment on both the topic of need and the topic of investment capital from a government angle.
Thank you very much, Caroline. Happy to be here, and just listening to my co-panelists. It's just really, I feel like we complement each other in many ways in terms of support to, boosting social entrepreneurship. I work as a business reforms advisor in the Kenyan government, and previously as an SME advisor, and really supporting the work around enabling businesses, especially the most vulnerable businesses, the small and medium enterprises, the social enterprises. So creating conducive policies to help these businesses thrive. So during the COVID period, I was part of the SME COVID response team that was headed by the Ministry of Industry, Trade and Cooperatives in the government of Kenya, and just really looking at, a deep analysis on the effect of COVID on businesses in Kenya. And, just like mentioned by my co-panelists, the effect of COVID on businesses was that a lot of the businesses had to downscale, a lot of them lost their staff, a lot of them had to change employment contracts, and people who are, on long-term contracts were now on casual or, temporary terms. A lot of them had to vacate their business premises, So the government looked at, prioritizing interventions and seeing how they can, one, offer some financial security and keep people employed, not only for financial security, but for that sense of connectedness and purpose. During a pandemic like this, I think it's important for people to have a purpose to, to keep doing what they do, apart from having that, financial security. But most importantly, the interventions were around really supporting the strategic businesses and institutions to continue, surviving and supporting the ecosystem. So part of the interventions, and the government was very quick to offer stimulus packages and looking at how they can improve the liquidity for these businesses. There was a reduction, for example, in the pay-as-you-earn tax, so that people had more money in their pockets to spend on essential goods and services. There was a prioritization of, pending bills in government. So government releasing more money into the market, paying for the pending bills. Prioritization of payment of VAT refunds. Again, this is supporting all the businesses that, have done, have done submissions and are entitled to refunds. Again, addressing the liquidity issue. But most importantly was an intervention that was looking at, how do you unlock funding for the purpose of sustaining these businesses? A lot of governments, a lot of African governments find it very hard to support the small and medium enterprises by virtue of the scale of these businesses. In Kenya, 70% of our businesses are micro and small social enterprises. So just the virtue of the scale of keeping them afloat, was a big challenge. So we looked at how do you prioritize the businesses that will be supported. One, we needed to look at businesses that are providing essential services. And this is where impact comes in. And this is where we look at social enterprises, which are really, providing the businesses that impact, that impact the economy. And the government then came in with credit guarantee scheme. We were part of the National Treasury team that was, that came up with a partial credit guarantee scheme. So the government put aside 3 billion Kenya shillings, which was towards de-risking funding to businesses. So this facility was supposed to help other financial institutions, private financial institutions, to lend to these businesses, and the government would take a first loss, and this is was really boosting the bridging finance required during this period. Of course, there are a lot of businesses which were also defaulting, so banks were also going an extra mile to offer interest holidays, to the businesses. But the Kenyan government was there with, a facility that really cushions a lot of these financial institutions, and also then provides onward support to these businesses in terms of freeing some liquidity, offering some working capital, making sure that essential services are continued, without disrupting, a disruption of the supply chains that we saw. So I think that has been one of the most impactful interventions. It's still been rolled out, but one of the things that it will do is to sustain the survival of these businesses, not only during COVID, but post-COVID, because the facility looks at a long-term approach to, to funding these businesses beyond the COVID period.
Thank you very much, Florence. And also like all the various programs and initiatives on the investment side and sustainable development side coming out of Kenya is really quite amazing. So thank you for being part of that. Giving it back to the people on the line or on the Zoom here for questions. There are no questions there yet. So as we're waiting for new questions to be raised in the Q&A section, Maybe Sushma, can I go back to you and also, I guess, ask your perspective on where the actual investment capital is coming through, because many kind of here may also be thinking this is all philanthropic capital that we're talking about, but what is then investment capital that what is the role of investment capital in all of this?
Sure. So as I mentioned, again, philanthropic capital is on one end of the spectrum, but the kind of investments that Avishkar does is impact with returns. And so, the kind of investments that we make are largely in high scale, high growth kind of businesses, supporting the underserved with a very strong inclusion or a sustainability theme. So broadly, we've also evolved over the years while we used to look at various sectors. I think we've now over the time zeroed in on 2-3 main sectors, which we have found to provide most impact. And those are financial inclusion and sustainable agriculture and a little bit in logistic techs. Right, because these are the ones we found have far-reaching distribution, impacts the segment that we are all focusing on, and provides the most economic benefit for pulling people out of poverty. So, all this was going well, things was doing good. A lot of mainstream investors were raising money for impact investments till COVID hit. Right. And as I think Cheryl mentioned, that the kind of investments that are happening have all dried up. Things are very slow. The investment activities have kind of slowed down. People are just taking stock of their own portfolio companies. So, there's not too much traction other than for supporting existing companies itself. But the way I look at it is the minute things open up, things start showing a path to recovery, capital has to flow. And all the more now people are recognizing that it can't just be running behind profits anymore. One has to recognize communities, one has to recognize the impact it has on the environment and the society. And hopefully investors will come out understanding this better. Probably they needed a COVID shakeout to understand the importance of investing in these sectors.
Great, thank you, Sushma. We have a question here also online, and meanwhile, Joe, you also just let me know that people can be asking the question themselves, which is even better. So, do kind of help us kind of, make that happen where we go. I think you need to raise your hands.
Yes, if you raise your hand, then I can give audio. So hopefully people see that icon on their screen.
Great. So maybe then actually, could you give audio to Catalina Brando, who's been raising her question? It's a little bit of a follow-up question on what Sushma was just talking about. So can I maybe propose, Catalina, that we channel that question to Cheryl, and then we can see if other panel members also jump in.
Okay. Well, thank you very much for this session. It has been very interesting. To give you a little of context, I work for the private sector, specifically in an infrastructure investor, and I'm trying to lead some sort of internal revolution to focus on impact investing a little more. We do have a very serious ESG strategy and commitment, but I wondered if you have seen in the market, in any other, private equity funds or asset managers, some sort of program or mechanism destined to allocate specific resources to impact investing. I don't think that you have to compromise on returns to actually make an impact. But I mean, I was just wondering what you have seen in the market so that I can get some ideas to bring them in and get some support on that.
So thank you. This is Cheryl. I'll answer quickly and then turn it over to my fellow panelists. I'll use a personal example. I mean, again, Echoing Green really focuses on very early stage emerging social entrepreneurs, and we optimize only around social impact. So the vast majority of those we funded over the past 30 plus years have started, traditional public charities, but increasingly we've seen a growing number of social entrepreneurs within our portfolio starting double bottom line or triple bottom line enterprises. And now about 50% of our applicant pool are comprised of for-profit social impact businesses. And ultimately, I think now our portfolio has about 18% or so of for-profits. Interestingly, about 3 years ago, we piloted a program with TPG's Rise Fund, which I think might be instructive. When you look at the Rise Fund, their ticket sizes are huge to us. They're 60 million or so. So for a very small early stage investor like Echoing Green, you would think there was not alignment. But all credit to the Rise Fund, where they wanted visibility and the opportunity to learn alongside a near peer like Echoing Green to understand what were some of the most interesting, innovative models, business models coming across the transom. They wanted more exposure to a more diverse group of social entrepreneurs, women, proximate leaders, people of color, and Echoing Green's portfolio allowed for that. So we spent about 2 years working with them, where we opened up our portfolio, and they had a first look at our fellows who not only met TPG social impact criteria, but also their financial impact criteria. And as a result, we were able to orchestrate a series of deals, you know, six-figure, mid-six-figure, high six-figure follow-on equity investments in 3 of our social enterprises. So again, I think it's instructive around how you can start to bring in learning opportunities to build muscles around social impact for companies that might be new to the journey. So that's a particular example that I thought was worth sharing.
Thank you, Cheryl. Any other reactions from the panel? Otherwise, I'll go back to, or I'll move on to Kate Cochran's question. Any immediate reactions from panel members to the previous question? If not, let's move on to Kate. Joe, could you give Kate the mic?
Thank you. I was curious to hear from your panelists if we're seeing any signs that this crisis is stimulating capital for what's called the missing middle. You know, the small and growing businesses that may not be scaling the way, you know, for example, an Avishkar is looking for, but that truly are the backbone job creators in their communities.
Anyone wanting, maybe actually Florence, this could be one to pick from you, maybe in the Kenyan context, and also given that you've been working with both social entrepreneurs, some of the micro businesses, some of the larger ones that we were talking about yesterday.
Yeah, thank you very much. I think there is a great opportunity. Like I mentioned, when we're prioritizing how to allocate funding for businesses which have all been affected, I think part of the criteria we used are businesses that are most impactful, that are going to survive beyond the crisis, because there was no use of, I mean, we found that there was no justification in putting funds for businesses which will generally wither away because of the crisis. I think it was more important to sustain the ones with, a stronger base, providing essential services. We also looked at the sectors that, the businesses were in, and like I think it was Sushma who mentioned, we look at businesses in the logistics services, we looked at a lot of the businesses in the healthcare services, provision of, basic, food and goods. And part of what was driving our prioritization is our development blueprint in Kenya. Fortunately, we had a four-pillar development agenda that was focusing on affordable healthcare, affordable housing, manufacturing, and food security. So this has been the government's we call it the Big Four agenda, and this is where a lot of resources had already been dedicated. So this Big Four agenda really provided a cushion against the effect of COVID-19, because when COVID-19 came, all those four pillars, were the basis under which, a lot of the businesses were supported. Any businesses providing services in affordable healthcare, in food security, manufacturing, there was a lot of prioritization of local manufacturing, particularly for PPEs. We saw a lot of value addition going on locally as opposed to relying on imports following lockdown in most countries. So I think our development agenda really prepared us, and really that was the basis of prioritizing which businesses that we are going to support. And again, a lot of these businesses were the missing middle businesses.
Thank you, Florence. I'm also realizing that already we're running up against time, and I also did want to make sure that we give the speakers at least a short time for reflection, which is even already close to impossible. There was one question, and just for sake of efficiency, I'll just raise it myself, that I'd love to run by Ashif, and then also if you could immediately close, Ashif, with your final, I would say, recommendation, or the thing that you'd want people to walk away with from this session. There's a question saying, you have referred to informal workers. I wonder if you have a program to support informal workers in the creation of startups eventually, and eventually non-profit enterprises. Please do feel free to take that question freely, but also given that you're working with both informal workers and migrants, curious if you had any thoughts there.
So just as far as the India is concerned, we have about like 400 million like the workers in informal economy, or like these workers are informal workers basically. About 50% people are come from the migrant community. So they are not a local worker. They are coming from the rural area to the urban area for jobs and work. So basically both the categories facing the different kind of challenges and the problem. That's one thing. The second thing, after the COVID in India, the reverse migration is a very huge issue. So basically the people from the destination, now they are going back to their source villages. Government initiated some large program where the not-for-profit and the like the civil society organizations are also engaged. One program is a BOCW. So recently government announced a very large package for the informal worker, and that package is about like 31,000 crore rupees. So it's I don't know, it's about 5 billion like the dollars. And the same time for the rural area, government announced another program, and that program is also about a 50,000 crore rupees. So these kind of program come from the government side, and nowadays the industry also come up with some solution where they engage with the not-for-profit organization. So as I mentioned, my organization Jansahas is launched the Migrant Resilience Collaborative. So we very intensively try to work with the Government of India. Government of India also try to develop some kind of like the solution for the small entrepreneurs as well as like the informal worker. So these kind of things are going on. But the most important thing as far as the like the informal worker is concerned, the financial inclusion. So in the past 4 to 5 months during the COVID period, government transfer a large amount of money to the small entrepreneurs or and also like the people engaged in the informal economy. But they are not able to claim this money because their accounts are in dormant. So these kind of issues are also there. So as per my understanding, basically we need to work with like a large number of the actors or the stakeholder, from philanthropy to the not-for-profit organization to the startups to the government like the agencies. And as far as India is concerned, particularly if all these organizations or institutions can come together and work together, then we can make a change in the lives of the workers actually. Yeah.
Thank you so much, Ashif. And that also hitting on collaboration, which I think has been key for all of the organizations, and panel members here on the line. I think we're getting closer to needing to wrap. So let me give it back to each of the speakers to give their one departing thought, and recommendation to people here on the line. What is that one thing that you'd want them to take away? Already thanking you in advance for being part of this conversation, and I'm really hoping that together we can not only weather the crisis, but also we'll make it through with all these amazing social entrepreneurs, so that they don't only recover, but that we're also all together coming out of the pandemic stronger than before. Cheryl, can I give it back to you for your closing comments?
Yes, no, thank you for including me on this wonderful panel. It was a really rich discussion. I'll say two things quickly. You know, there's a famous historian, Frank Snowden, who wrote sort of the seminal book on epidemics in society, and he talks about how pandemics actually provide, you know, they just don't reveal society's existing vulnerabilities, which we've seen, but they also present an unprecedented opportunity for transformational change. So I think if we think about this moment as an opportunity for progress, I think impact investors have a real opportunity to lean in and really support those on the ground who are trying to find solutions in this moment. Sushma already mentioned some of the sectors that are ripe for investment: financial inclusion, food security, sustainable ag. I would also add health to that. And then in looking through some of the concerns that impact investors are thinking through at this moment, you know, how do they leverage and build on existing due diligence channels to find deals as well as support deals during this moment. Think about working with established intermediaries that are closer to the ground. And in this moment, I think if we work in collaboration, we have the opportunity to really move forward together.
Thank you so much, Cheryl. Sushma and Florence, 2 minutes between you. So Sushma,
Sure. No,
first, maybe.
Yes, I'll keep it quick. So there, I was looking at some of the questions that have come, and there's clearly a lot of emphasis on small businesses. Small businesses tend to be the drivers of the economy. And that's where we will see a lot of capital go in, whether it's debt or equity in different forms. And that is what is going to get people out of the trouble they are in. That's where I look at it.
Thank you. Florence, over to you.
Yeah, thank you very much. Thank you, Carolien. Happy to be part of this conversation. My very brief closing remarks would be, I think for me, one of the takeouts of the session and of this period is that as we look at impact investment and social entrepreneurs, I think there's a need to create more like an ecosystem approach to supporting, you know, both the demand and supply of impact investment. I think we have seen that we cannot, you know, establish interventions in isolation. What COVID has taught us, the pandemic has taught us, is that we need the connectedness of the ecosystem. We need a strong ecosystem for us to be able to thrive, as social entrepreneurs to be able to thrive, for impact investment to be able to have a good pipeline and, you know, returns on investment, but most importantly, to impact on the livelihoods of people. So thank you very much.
Thank you so much, Florence. And let me then also close mentioning that next week, the COVID Alliance Response Alliance for Social Entrepreneurship will be launching its action agenda, where we're really calling on corporates, investors, governments, everyone really, to have the back of social entrepreneurs as first responders to the crisis and as pioneers for a new inclusive and green economy. In that also a number of facts and numbers that we've been able to surface, not as many as we'd like to. I think we're all still trying to understand really what's going on and how we can best support social entrepreneurs on the ground. But hopefully that this session has helped you gather some input to and an opportunity to further shape your own strategies. And all that remains is to thank you for joining onwards and wishing you a strong and swift recovery from what is beyond the global challenge, also for many of us personally, a particularly difficult time. So thank you so much for joining.